Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Apple report for Tuesday, January 2nd, 2024. Happy New Year's. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's jump into the charts. Start with the big picture. Work our way into the day itself. This is a weekly bar chart just to go back in time. It was in May that we settled above this long-term channel top combination, 164.06, 165.48, that set off a long-term show of strength, expecting still at some point, I think in 24, the 234.54, a longer-term 4-year channel top. I think that is still in play. And in the interim, following the most recent testing of this channel top, we fell back to it following the July high. We came off of it a couple of months ago. I guess that would have been an October low. When we settled above this formation at 180.87, that is sort of a confirmation of the longer-term bullish dynamic. Now, as things sit, we may actually fall back to this low 180s. In fact, they remain, I'll just say a 3 to 5 week objective, holding below this combination rising 1/3 speed line and channel bottom that is now at 195.63 to 195.92. And this is your area to short sell the market if that is your inclination, because over the next 3 to 5 weeks, as I mentioned, we can fall into the low 180s. Now we have 189.45 today, and I'll just jump to today, that can contain session weakness. And we've got 191.77 as an intraday pivot point. I'll just describe that. I don't show it in any of the charts, but it's nothing more than a simple trend line off this early December low and this low from last, I guess that would have been last Wednesday. So across these lows, very simply, 191.77, able to contain intraday selling pressures, and in fact, above which the 193.83 channel top remains in reach. Now, there was a point last week where this was our upward pivot point, 193.83, as we move into later January, but no longer now that these more meaningful formations are above that channel top. It is 195.63 to 195.92. But I will say, that if we push through or open above perhaps 193.83 today, I think you might anticipate 195.63 to 195.92, where we can top out for the week and fall away into late January from here. This could almost be considered a 4-star multi-week resistance area. I'm not quite sure why we haven't bumped it up as much, but in any event, this is our short sale zone. And the other way I will say that is I'm not interested in being long into later January unless we either A, close above 195.92, or by over the next 3 to 5 weeks, we fall into the low 180s. I'm either buying the market on strength. I'm talking 3 to 5 week swing traders and beyond. More the 3 to 5 week swing trader. Going long with a settlement above 195.92. Until then, the 3 to 5 week swing trader is short below 195.92 and anticipating 180.87. Where you can go long on a bottom-picking venture, if you will. And I think that's a pretty good bottom-picking venture, so to speak. I do think this 180.87 formation is pretty solid support that, if tested over the next 3 to 5 weeks, able to contain selling through Q1. And from here, we can round back up again to new highs. And I think that kind of covers the downside pretty well. But let me just go over it one more time, which is to say we have a channel bottom at 189.45 that is in reach today. If we break that that simple trend line off of these lows at 191.77. 189.45, able to contain session weakness. And if we close today below 189.45, I think we can spend maybe a day hesitating at 186.65. I've reduced that to an intraday level because I do think if we close below 189.45, bearish, how should you put it, acceleration? I like to use the word acceleration for bullish moves, but the same works the opposite way. We could fall fast within a week, two at the most, if we close today below 189.45. So what is now a 3 to 5 week objective below 195.92, anticipating 180.87, becomes more of a 1 to 2 week objective if we settle today below 189.45. So, talking to 3 to 5 day swing traders, if you've done nothing, if you're not short, if you're itching to go short, I think a settlement below 189.45 could be your signal for reaching 180.87 within a week or two of trade, where we could bottom out through January and the balance of the first quarter, as I mentioned earlier, with the long-term channel top on the weekly chart. Let's go back to the upside, see if we can finesse that a little bit. There's your 195.92 channel bottom we settled below about a week ago. And there's your 193.83 descending channel top that if we push or open above could yield 195.92 today. But it really is this combination rising 1/3 speed line channel bottom between 195.63 and 195.92 that if tested this week, able to contain buying through next week, and below which the low 180s should be considered a 3 to 5 week possibility. Now, if we do, close above 195.92, I don't show it here, but I do think this 202.12 formation becomes a realistic 1 to 2 week target where we could top out for a week, fall away perhaps. This would also be a meaningful upside continuation point. 202.12 is very similar actually to 202.82, which is a different trend line off these highs. That's a longer-term trend line off those highs, and it correlates pretty well with 202.12, which is a simple 3-week channel top right now, based in part on last week's low. So it's not expected if we close above 193.83, but it is expected if we close above 195.82. So talking to 1 to 2 week swing traders, if we close above 195.82, I think you can anticipate 202.12 where we can top out on a weekly basis. I think that pretty much summarizes it. I'm trying to think, I will go back to this chart here and just emphasize that while we have pushed through the 198.23 July high, which was an all-time high until a few weeks ago, if we close above it at the end of this week, that is another sign of strength, a longer-term strength perhaps that could yield this channel top. But I'm talking mostly to 2 to 3, 3 to 5 week swing traders when I say that we take it one step at a time, closing above 195.92. It is the 202 handle we can expect within a week or two before falling away. But yes, in the big picture scheme of things, closing the week above 198.23 is a sure sign of strength as we move into the second quarter, expecting higher trade then in the months to follow. I think I pretty much rounded it out for Tuesday's Apple Report. Please click like, share, subscribe. Check out wickedstocks.com for that 5-day free trial, and I'll be back tomorrow with Wednesday's Tesla. You have a great day.